Okay, welcome back into my InvestEngine portfolio update. Now, we're a couple of months late and there's been so much that's been going on in the stock market, so we've got a lot to cover in this portfolio update. Now, I'm not going to go into too much detail when we go over some of the markets, some of the news stories that have happened over the past couple of months. I typically do that on my Vanguard portfolio update, which you can go to on my channel and many of you will watch anyway. But I still do want to touch on some of the things that have happened over the past couple of months, which has meant that the stock market has been on quite a roller coaster ride, even though it's kind of ended up in the same place in terms of pricing, but kind of let me explain. So one of the first big things that many of you would have went through and seen in your accounts was that huge sell-off we had around August the 5th. And you had that weak jobs report come out of the US, and then there was suddenly everyone was up in arms about fears of a recession and everything was going to end and the stock market had to crash 20-30% or whatever. There was a huge amount of trading that went into that week and the stock market recovered relatively quickly. So those news stories kind of went away. And of course, there was a lot more detail just than that. You had the yen carry trade going on as well. Lots of different things all coming together at once. Big fear around AI and the Magnificent Seven not keeping up with their earnings. There was a huge amount going on, huge amount of chatter in the background. Lots of people getting very nervous about their accounts and nervous about some of the big names not delivering. Because at the moment, there's still that concern that you have overvaluation of some of the big names. The AI bubble is apparently going to burst. Now, for me personally, I don't make a judgment on any of that, and I don't really care, if I'm honest, as a long-term investor. I like to see what's going on. I like to understand what's going on and what goes through people's heads, but all of the noise really is just noise from my perspective. And when people talk about fears of a recession and fears of the stock market crashing, it is totally and utterly irrelevant if you are a long-term investor. You know, if anything, you should relish those lower prices, which we'll talk on a little bit later when we go into the portfolio itself. Anyway, that was one of the biggest parts of the news. And then that got bought up, I would say relatively quickly. You can see if I pull up a graph of the stock market, I'll just take the S&P 500 as a good benchmark here. You can see that dip in August the 5th, and then things pretty much just kind of felt like they got back to normal. We had a bit of a rally, and then things ended up where they are now after the latest bit of news, which you just had out of the US. And that latest bit of news is the Federal Reserve finally cutting interest rates for the first time over many years, since of course that the rates have been increasing steadily over the past couple of years to fight inflation. Now, the rate cut was 50 basis points, which was a little bit more than was expected. There was that balance of some people expecting just 25 basis point. Now, there are fears from certain corners suggesting that the Federal Reserve has moved a little bit late on that, and this could have some impacts on the economy with people being laid off or not as many jobs being created, etc. But really, again, in my opinion, this is just short-term noise. It's definitely good to pay attention to this, and it will have huge knock-ons in the economy. There will be lower rates in terms of mortgages, loans, for businesses, etc. So there's a huge amount of kind of positive things which can happen in terms of growth. And then also another thing that this does is reduce the rates that you're going to get typically seeing when you save money. So it's going to kind of increase that gap between what you can save and the rates you can get and what you can invest and what you can get there, that kind of risk equity premium that I spoke about in a video just before, which then of course means that people are more likely to look at stocks and riskier assets to get more in return. So it's a really interesting lever that they have to pull. And then jumping over here to the UK, you'll see that the Bank of England just in the last couple of days kept their rates at 5% as they are at the moment. So they were cut down to 5%. And then just kind of held them steady. There was pretty much expectation that this would remain the way it is at the moment, although there is argument out there that people would like them to cut a little bit more. I would say the UK is in a slightly different position to the US. The US feels like it's got inflation a lot more under control, whereas here in the UK, our services inflation especially has seemed to be a little bit more sticky, I would argue. And I would also say that our growth is nowhere near the likes of the US. Yet lots of people are under pressure. So the Bank of England is always in that really difficult place between a rock and a hard place, effectively deciding what to do with those rates. Now, one thing always worth pointing out is that interest rates aren't just going to affect you and me when it comes to mortgage rates and loans, etc. It does have a huge impact on the wider economy when it comes to how much businesses can borrow and also governments. Now, on that topic of government and borrowing and taxation and all that great stuff, there is that UK budget set for the 30th of October, which I will cover on the channel, and I'll do a different video on that one, breaking down all the things they're going to change, especially if they mess around with anything around pensions and ISAs and all of that stuff. So I'll kind of do my analysis based around anything that will affect us as investors. Fingers crossed there's not going to be anything major when it comes to the likes of us investors, but I think pensions will be the biggest target here. There is also talk around the limiting of ISAs to 100k, but this is a hangover from a Resolution Foundation report, which I don't think is a serious consideration from the government. It makes a great headline and it makes great videos, which people like to speculate on, but we can only wait and see. But certainly pensions are going to be one of the biggest areas that the UK government are going to have to potentially have a look at, whether they restrict the amount that you can put in terms of getting the tax relief, especially for higher rate earners. And then because they're not going to touch income tax, national insurance and VAT, although personally I think they should, rather than dip into the other things like capital gains tax, potentially corporation tax, and things like council tax as well. Loads to go on there. That's going to be a video in itself. I'd rather not speculate on that for the time being. Let's just wait and see what we do. As investors, we are not in control of that. So I kind of just put that to one side, carry on regardless until that time, rather than making moves. Anything that we do see in that October budget will likely then be implemented in the next financial year anyway. So you will have some time. And if there are like major changes made to the way ISAs and pensions are structured, then we can kind of work together and figure out what might be best for us moving forward. And I'll share all of my moves and thoughts anyway. So it's going to be some interesting times over the next couple of months, which will be the next portfolio update I do, definitely for my InvestEngine account. Anyway, now it's time to jump into the portfolio itself, see how things are getting on. Now, many of you will know I've got my stocks and shares ISA here, or one of my stocks and shares ISAs here, and also a small self-invested personal pension that I wanted to start up and really give the platform a try to see how it goes on with that one. Now, let's dive straight into my ISA first. You can see a new all-time high, I think, in the account of 43,166 as the time of recording this video. Let me just dive in and show you all what's in it. Many of you regulars will know exactly what's in the account. It's a very simple portfolio made up of different ETFs, which pretty much reflects a global world. There are ways to do things simpler, and you can have a single ETF and a global ETF, a developed world ETF. There's basically loads of ways you can do things. As usual with any of these things, remember, I'm not your financial advisor. I am not a financial advisor. So please do your own research and make sure you find a portfolio that works for you. But I will just take you through mine at the moment. Now, the great thing about doing this for a longer time now, as I've started this portfolio, is that you will see, if we have a look on the maximum chart, all the little black dots where I've put money into the account. Now, my direct debit at the moment is set up to £800 a month that goes into the account. Just gets automatically invested at the start of every single month. So it just hits the account and gets automatically invested. It's a shame when we had that dip on August the 5th. I almost wish that we could delay that by a few days. It would have been nice to hit the bottom when the market bottomed out then, but you win some, you lose some. I don't try and time the market in any way. Lots of people do occasionally ask me, would there be much difference if you invested on the first of the month, the middle of the month, the end of the month? And there's no real way to say whether that would be good or not. You would have to go and back test that and see what worked. But even if it did, you know, if there was a day of the month, for example, that was really, really good, there's no guarantee that that would work in the future. So for me personally, I just like to get it out of the way. Sometimes I'll have an amazing price and other times, you know, it might not be a great one, but in the long term, it's not something I focus on too much. Anyway, let's just have a look over the last 6 months, especially over the last couple. So you see when the money went into the account, does the automatic buys, and you can see that dip there actually, funny enough, which I would have preferred to like when the account actually dipped under 40,000 there, and then has recovered since. Now, if I just scroll down and have a look how the portfolio is made up, there's no need to pause the screen or save anything here. I do share all these portfolios, so I'll leave those links in the description below. And also just on that note, remember that if you do want to get started with InvestEngine, I do leave all of the links in the description below. Just have a look down there. And if you deposit and invest £100, you can get a welcome bonus of up to £50 into your account. Don't forget just to make sure that you read through all the terms and conditions as usual and do your own research on that one. Now, if I go through the different ETFs that I have in the portfolio, you will see if I do change the timescales to the last 6 months or so, you will see the star of the show yet again is the S&P 500, which is how I kind of represent my US part of the market. So I put around 64% of my money into the S&P 500. You'll see it's been up 6.4% during that period. And because it's the largest share, as you would expect, you would see the largest gain there as well. So actually in percentage terms, if you look at the account, you will see all the way down here, the FTSE 100 has actually had a relatively good time in the last 6 months. So percentage wise, up 9.5%, giving us a return, a smaller return because there's less money there. And then after that, you have the emerging markets, and they're kind of finishing up in the bottom 2 places are Europe and then a small section also in Japan. It's funny, since I kind of got Japan into the portfolio, it's performed terribly well. So it just shows you can't really try and time the market. Japan is my representation of that part of the world. Banning things out into the maximum, then of course you get different results. And as you can see here, percentage-wise, the S&P 500 blows everything out the water, and then everything else slightly lags. It is positive to see both Europe and FTSE 100 doing relatively well there. And if we do expand it out, unfortunately, Japan is lagging, at least for me, when I started investing into that account. Now, one other thing I did note down that I wanted to speak about in this portfolio update, and I do touch on it now and then, both on the channel in other portfolio updates, is you should always keep an eye on the pound to dollar exchange rate, because lots of you might look at the S&P 500 and what you're invested in and think it doesn't match the chart on Google, for example. So if you actually have a look, I'll put this chart up on screen now. Over the last 6 months, the pound against the dollar has actually strengthened by quite a significant amount. So you'll see here, it's gone from around 1.22 to 1.33. So that may not sound significant, but that's almost 8% stronger. Now, from an investment perspective, just think about what this might mean. So stronger pound will mean you're going to get more dollars. So anything denominated in dollars, so those US stocks, you're actually been buying slightly cheaper, so quite nice. When you sell them, it has the negative effect. And then when you're buying UK listed stocks, and especially if you're buying big multinational companies like on the FTSE 100, it can actually be a negative thing. So because most companies on the FTSE 100 get most of their money from outside of the UK, denominated in dollars, if the pound is strong, then when those dollars get converted back into pounds, actually you get less pounds. When the pound is weak, you actually get better returns in terms of those international returns denominated in dollars. So you have to kind of flip your head around that. But that is a big factor when you compare UK listed ETFs with the ones you might see over in the US. So if you watch any of the US creators, and for example, you might see some of their ETFs up 22% and you're up, 18% or 17%, you're thinking, where's that difference? Typically, you'll see that difference in, if everything else being equal, in those exchange rates. So do keep an eye on that. Again, it's one of the things that short term, I don't really pay much attention to because it's not in our control. So long term, you're going to get the average ultimately. You're going to buy it at a good rate sometimes. You're going to buy it at a bad rate sometimes. Not something I can control, but it is something worth knowing about. And personally, for me, is another reason why just diversification, global diversification, is just so important, because all of the different currencies interact in different ways that there is no way you can reliably predict what's going to happen. But don't worry, there will always be some people who will claim they know exactly what's going to happen and they have perfect timing, and they always show you their winners, but never their losers. But anyway. So that's the ISA called Toby's World. Remember, I share everything in the description anyway, so you can always have a look and kind of get inspired by some of these different portfolios. They're always just a good kind of starting place, but it's always worth doing your research and really digging in to find what works for you. The SIP is looking quite nice. It's up to nearly £2,000 now. This I started not too long ago. £200 a month goes in. And as you know, because it's a self-invested personal pension, that £200 gets topped up by 25%. So £50 effectively gets put in a few weeks later. Now you'll see this actually on the graph. So when I first put £200 in, and then the second £200 in, and then the third, I got my first relief on the 19th of April. So from the 1st of February, I actually got my first relief there. And then you will see on the chart here, those £50 buys are all the tax relief going in. I have the account set up to auto invest. So anytime that tax relief comes in from HMRC, just gets invested straight away. That's one of the kind of differences between a pension, or at least a self-invested pension, versus an ISA. ISA is completely tax-free on the way out, which is great. Pensions work slightly differently, but one of the big benefits, although you can't touch a pension, is you do get that tax relief. And at the moment, at least, if you're a higher rate and additional rate taxpayer, there's additional reliefs, which I have gone into detail in separate videos. But it is interesting to at least understand how they work, because your ISAs and your pensions are your rock star accounts when it comes to kind of investing in retirement and everything like that. You want to get the most of those tax advantages that you can. Anyway, this one is certainly much simpler to look at because it is really just a single fund. It's Vanguard's FTSE All World Fund, VWRP, accumulates everything. There's no dividends that are paid out, and it's just super simple. And the reason I do my pension like this compared to my ISA is I just like to keep the pension almost just so simple, single fund, don't have to think about it, don't have to worry about it. Whereas the ISA gives me a little bit more flexibility and I like to just tinker a little bit more. That's just kind of my personality. Still keep things relatively straightforward. Yes, there are other global funds out there that I've covered before that you could pick, or different funds. Again, it's always going to be up to you what you want to do. But this is just nice to see that as I've started this one, we've gone on a positive trajectory so far. And it's all about now just building on that and building on that using pensions and ISAs. And hopefully over many, many decades, should do pretty well. But we will find out, and hopefully I can actually keep these portfolio updates going for decades and decades. Anyway, I will leave it on that note. As always, if you do want to get started, like I said earlier, I'll leave all the links in the description below. Make sure you read all the terms and conditions. And as always, let me know how you're getting on in the comment section, and I'll see you in the next video. Happy investing.